Let's do the forecasting first. Here in EU, we are seeing some move to upside. Okay, it broke the high. Now it's trying to continue its move to the upside. Let's see how the present candle closes. But I don't want to just place an entry somewhere around this area after the closing of this candle, because let's suppose a candle comes down like this and hits my entry, then that would not be a good entry to take trade. And if I see the previous price action, let's just look at the price action all in all. So what we can see that the market is in some sort of range. If I see the price action like from here to this area, we are seeing that the market is in between this range. Okay. So when the market is in between this range, so before taking any trade, we need to be extra cautious. Here what the market did, it break the high, retrace, again break the high, retrace, came down, break the low, retrace, again went up, break the high. So when this candle broke the high, it was looking very impulsive. But if I look at the entire price action, it's not giving me enough confirmation so that I can take a buy to continue to the upside. So I will be waiting. Setup in EU. Till now, we are in this big range. So before taking any trade, I would like to be double sure. Let's move to next here. In AU, I wanted to take a bomb entry. Okay, but as I'm seeing this sort of move to the upside, it is not making sense to take any sort of bomb entry. Our bullet entry is somewhere around this area, but all these candles are white candles. And let's suppose the present candle closes white, then it would be some sort of V-shaped recovery. So after this sort of candle, we usually see some sort of range. And if we look at the entire price action, then the entire price action is in some sort of range. So before taking any entry in EU, we have to be very sure, because the market is in between this range. Okay. So we will be waiting for some nice setup for taking any entry, because in this sort of range bond market condition, we can easily tag us in and tag us out. I have placed an alert just 2-3 pips below the low. I haven't placed any entry. EJ, we are seeing some sort of move to the downside, then break the low, retrace, break the high, retrace, and again broke the high, retrace. And the overall price action, if I look at the overall price action, till this area, it was in this range, break the low, and now it's again falling inside this range. Okay. So, and this is a big indecision candle, so usually I don't like to take any entry. Just let's suppose this is a impulsive candle, so I don't want to place an entry like this. Don't want to take this sort of entry. Would like to just wait to see how the candles comes down, and you can see that we have some sort of equal wick at the top, and this black candle is also a small indecision candle. So when you get an indecision candle after an impulse, there is a high chance that the market will go inside the range, and it is also a retracement candle. So if this white candle breaks the high of this candle, that would be that would not that would not be a high entry. Let's wait and see what it does. But there is a high chance that it may break the high of this candle. It will invalidate the previous entry. AJ, we had a nice entry to the upside. We took the entry, it went all the way to 1:2, 2.1. But it was, I saw this entry at around this level, okay, at around this area. And I was very tired. I could not just wake up, and I usually, if let's suppose this trade would happen in the afternoon or evening, then I would definitely manage my SL at around break even. Okay, I would not let the 2% trade to hit the SL, but it was happening in at the middle of the night, so I was not able to wake up and manage this trade. So that's okay. It just hit our stop loss. And in EJ also, I just missed one entry. Okay, it would be a loss also, but I would definitely manage this. I could manage this trade. Okay, so this was a bomb entry. It was a perfect bomb entry. Yeah, many of us, I don't know how many of you have taken this bomb or not, but this was for me a perfect bomb entry. Okay, so this candle was opened at 11:130. So our spread hours open at around. Let me just check. Think spread hours open at 2:30 to 4 3:30. 2:30 candle, and so okay. So at 11:30 a.m. our spread hour starts. So as this candle starts, these two candles are spread hour candles. These two candles were spread hour candles. This 1:30 candle and this 2:30 candle. So our spread hour starts at 1:30 and ends up at around 3:30. So this 2:30 candle will close at around 3:30. So after the closing of this candle, these two candles, we would place our entry somewhere at around this area. Okay, because this is the first candle which formed the setup. Okay, so we could place our entry somewhere at around this area, and the market just went up, and it would have tagged us in, and then it was giving us somewhere at around 1:3, more than 1:3, but so, and I could easily manage this trade. Okay, but that's okay. If you would manage this trade according to GT rule, it would be also a loss, but I would not let it go all the way to my stop loss. I would close somewhere at around at 1:3, or at least close at around break even, but not in loss. Sometimes it does happen. You like in AJ, I did not get a chance to manage this trade. This happened at around like 5:30, and I slept at around 12 p.m. So it was difficult for me to just wake up and manage the position. It was going well. I would suggest you to close at around 1:3. Try to backtest 1:3, not 1:2. What you can do, once the candle reaches that 1:2, you just bring your stop loss to the low of that candle which touched 1:2. Okay, just mark an alert at 1:2. Let's like this. Let's suppose I have marked an alert. Once my alert start ringing, I will just place my stop loss just below the candle which gave the 1:2. So I also do this sort of thing in my back testing, so you can do this as well. But 1:2, if you will try to close every trade at 1:2, believe me, that will not be helpful. I have done all these sort of things. 1:3 is good, and you will see that most of your trade will definitely go at 1:3. Okay, most of your trades. here I am booking at around, let's suppose 1.3. Okay. If let's suppose I would have closed my EJ trade, let's suppose if I have taken this trade, and if I would have closed this trade at around, so it would also be easily given at around 1:3. You can see 1:3. Okay. Let's suppose I had taken one more entry in NZD USD. So this trade also almost went to 1:3. So this was the entry. I took it at around this area. Okay, so it also went, you can see, almost 1:3. You see, it also went, you can see it also went 1:3. Okay. One more trade was there in AUD USD. I took this trade. Uh, where did I took this AU trade? If I So believe me, try to close your entries at around 1:3. Less than that will not be a good suggestion, I would say. This is Euro USD trade. Okay, it did not went to 1:3. I have taken only like three trades, one, two, three. This was just a pseudo trade, 0.01 long. So I have taken three trades only. Okay, and in three trades, two went to at around 1:3. These two trades went into 1:3. Sorry, this NJ trade went into 1:3. This AJ trade went into 1:1.3. And if I would have taken this EJ trade, then I would definitely like it was also giving us 1:3. Okay, so I would say that try to close at minimum 1:3. 1:2 will be very less, I would say. Okay. You can do your own back testing and try to see the result. Try to check the result. But see, the thing is that if you are hi Timothy. So if I would suggest you, if you are new to GT, don't try to close your entry at around 1:2 or 1:3, because in the beginning, what happens? We used to take lots of like false entries. I would not say false entries, but not a good setup. But you will not be able to resist. Yes, Timothy, I have decided to close my trades at around 1:3 because I don't need a home run to pass the challenge. I don't need home run to pass the challenge. I have seen this thing. See, in my back testing also, uh, I have I'm gathering the data, and if I look at my data, then you can see we had lots of negative months, but when I close my entries at around 1:3, I am getting all like 3-4% up, 3% up. Okay. Here also, if you look at the losses, so here I was some sort of break even. This was see EJ in 2022. EJ and EU was not good, and this is because of the war, which was happening in Europe. So this is the reason why it was not happening well. But if you look at the other months also, then you can see that we had some good months. Like here, by closing at 1:3, I made 7%. By closing at 1:3, I made 5%. And if I would have closed at around 1:2, if I would have closed it at like GT, I would made only at around 1:2 of, oh, sorry, 1.8%. Sometimes we are also getting less percentage. But see, if I'm not getting 17%, okay, but I don't need to make 17% to pass a challenge. So this thing is only for the challenge. Okay. After challenge, you may also do this thing, but so I'm not suggesting that you should do this sort of thing for your once you pass the challenge. Also, no. Once you pass the challenge, you can again come back to this this rule, this setup. Once you pass the challenge, then again start booking your profits like GT. But if you are like taking the challenge and if you have some experience, I'm again like putting pressure on these words, like if you have experience, because the thing is that in the beginning, like we used to take lots of, I used to especially take lots of poor trades. So when I used to take poor trades, okay, and let's suppose I have taken 3, 4, 5 losses in a row, and if I will not let my winners run, it will difficult for those traders to recover their account also, because they used to take, like if a beginner is taking a challenge and he's closing his trades at around 1:3 and he's taking like 10 trades or like 7 trades, 6 trades, 6 loss, and they try to close their entries at 1:3, then it becomes difficult. But if you are not taking that much trade, like right now I am trading in a way where I am taking not a lot of entries. Okay, so I'm not taking that much of entry. If I show you that first, like from the challenge started at around 29th of March, and today is 6th of March. So like in the span of like 29, if you calculate this, then 29. And if you see that I have already bought this challenge at around 22nd of March. So in 22nd of March till 6th of April, I have taken only 3 trades. So if your trade is this sort of, then you should go for 1:3. But if let's suppose I'm taking 12 trades and I try to close my trades at around 1:3, then it will become difficult. Believe me. Try to like see, if you want to do something, then try to just implement those things by yourself on your chart and then get the result. No, it's not for me. We can see that it's a very aggressive, like all 3 candles are white candles. These are very aggressive. Yes, it's a like a V-shaped recovery. No trade for me in AU. NJ, we are seeing that the market is some sort of uh, ascending. Okay. Ascending. Sorry, it's descending. We can see that we break the low, retrace, then it went up, break the high, retrace. Okay, then again break the low, trying to continue its move to the downside, but it formed a wick. So I don't want to trade. I don't want to take the this trade. You can see this was my entry, but I don't wanted to take this entry. And the reason is that if we can easily sorry, we can see that the market is completely descending by looking at this price action. Don't The first thing is that try to look at the price action whole. Okay, so if you look at the price action whole, you can see that the price is completely descending. Okay, breaking the high, retracing, breaking the low, retracing. Okay, forming lots of wicks at the bottom. Here wicks, here again lots of wicks. So these sort of scenarios we can easily get some sort of range bound market condition. Okay, so we will not be looking for any entry. Here we will be waiting. GBP USD again, it's a V-shaped recovery. We had a wick at the bottom. And before this week also, I did not wanted to take the entry because see what the market did. It just barely break the low. Just barely break the low. The next candle gave the wick. And after this white candle was a complete engulf. And see, this was an engulfing candle also. If you look at the entire price action, so it was also in some sort of range. So the market was is in some sort of range. We had lots of wicks in this range. So if we get a impulse, try to be very cautious in this sort of price action. I don't try to take any random entries in this sort of price action. Okay, let's start our backtesting. Right now, I'm not looking for any entries. Okay. AU, it's going quite well, but I have just placed my alert. I want to see. I'm not like, as my experience, I'm not seeing any sort of nice move that that should continue like this. No, there is a very low chance that this sort of thing will happen. Why? Because if you look at the price action, it is completely inside the range. We have big candle to the upside. We have big candles to the downside. Okay, these two candles are like these two impulses are clearly telling us that the pressure to the upside and to the downside is almost similar. Okay, so when you have these sort of similar pressures, and if you look at this piece of price action, then also it's just breaking the low retracing, breaking the high retracing. Okay, if you look closely into the this price action, if you do sorry, if you do a zoom in, then you will see that the height of this black candle is almost similar to the height of this white candle. So this price action is also telling us that can just no, this is the you have to read between the candles. If you look at this price action closely, you will see that if I measure the height of this black candle, which is almost 29 pips, and if I measure this white candle, which is almost like 31 pips. So 29 pips down, 31 pips up. What do you think? 2 pips will make a big difference? No, it will not make a very big difference. And let's suppose I get a black candle like this, which almost grabbed all the liquidity to the downside, which is present below this area. Grabbed all the liquidity and then just goes up, formed a wick at the bottom. Okay, and then it start moving to the upside, then I would like to take that entry. But here what I'm seeing, it has not grabbed the liquidity or anything. It is just a random move to the downside and random move to the upside. If you will try to take this sort of entry, there is a high chance that it may take your stop loss. I have placed my alert, but I don't want to just after this candle I could, you can see that if I wanted to take this entry, it would have easily tagged me in, because 2 pips. Let's suppose I place an entry somewhere around this area. It would have easily tagged me in. You can see that 2 pip is almost at around this level. It would have easily tagged me in, but I did not want to take this. Yes, if let's suppose we get a retracement, then a nice continuation, then that would be a good entry to take. Okay, which because it has already formed originated a trend, and so there is a chance that it may continue its move to the upside. But till then, just wait. If you ask me, no, I use euro pairs. I use at 15 pip stop loss. Euro pairs I use 15 pip stop loss. Euro JPY and Euro USD 15 pips. AUD USD, AUD JPY, NGD JPY 12 pips, and GBP USD 20 pips. Let's move to our backtesting schedule. So nowadays, my college is putting lots of pressure for attendance. Okay, that is the reason why I have to attend the college, because they are saying that if you will not maintain minimum attendance percentage, they may deward or detain the student. So I don't want to get debarred, because this is my second last semester. Okay, and I have already Just give me a second. So let's start our backtesting. Break the high. Right now we are seeing it break the high, retrace. Okay. And the market came down, break the low, and again showing some retracement. We have started a move to the downside, but here I am seeing some weakness to that strength to the downside. Let's if you see, I have already I know this in about this indicator much before than you, bro. But I don't like to use this indicator. Believe me, try to read the price action without using any sort of indicator. You will learn a lot. See, when you mark lines by yourself, you will see the charts again and again. You will see some sort of price action which will not be looked by if it's automatically adjusted. The lines automatically adjusted to you. You will not. You will definitely miss those price action. And this is the reason why I try to use that indicator. You can see that it is on my chart, but I never use it. Never. Because when you try to use it, you will definitely miss some price action, and you will not even know about it once you have not that sort of experience. You are beginner, then you will not be able to even know that what I am missing. So here we can see that the market broke the high. Okay, now if I look at the price action, it's not giving me that sort of confidence that it will continue its move to the high down. But just check the entire price action. Here I would like to place an entry because the market is trying, it's ascending, oh, sorry, descending, and here it broke the high, it rejected, but it's trying to continue its move to the downside. Let's just wait. Just wait for one more candle. It's looking quite good, but price action wise, logically, it's not fitting to my logic. Let me just check. Okay, this is an inside bar, so it's not fitting to my logic. Let's just wait for one more candle. It's looking quite good, but if I am seeing the previous price action, it's not giving me that sort of strength. Again, market is has started slowing down. It break the low. We have a nice descending channel. Try to take this entry. Stop loss is quite small. That's okay. Not give us the opportunity to be in the market. So here many people will try to take this entry. But if it's not fitting, like if logically it's not good, if I look at the price action prior to it, prior to this candle, it's completely messy. What it was doing, broke the high, retrace. Look how it broke the low. Again, it broke the low, and you can see when it broke the low again, it's again forming this sort of wick. Then it again break the high, again retrace. It was also forming some sort of range again here. So if you are getting this sort of market condition, don't look that, oh, market just fall from here. No, it is just the probability which played out. But price action wise, it was not looking very healthy. If I compare the height of this candle to all these white, these black or these white candles, so this is nothing. Yes, it was just the probability which played out. Price action wise, it was not looking good. Just give me a 2 minute break. The market has broken the low. Okay, our entry is somewhere at around this area. And if you look at the size of this candle, it's not giving me that sort of confidence that it will continue its move to the downside. So let's wait for one more candle. Barely break the low. Not going to take any entry. So if I get a bomb, I would like to take the bomb because I'm getting a nice impulsive candle to the upside. See that this is a deep retracement. Here it broke the high. Now trying to continue its move to the side. We have some wicks, so if we get some range and then or we get a small bomb, then I would like to take that bomb. Okay, we are getting some range. Let's wait. Oh, okay. This was a Friday, so I don't wanted to take a trade just opening of the candle. And this is although a good entry because we can see that the market has started a trend to the upside. We got some range. Okay, we waited for 4 hours before taking any entry. Okay, let me just check. We have waited for. It's looking quite good, but as this would be a 6:30 p.m. AM trade. Everything is looking good, but the thing is that it's a Monday morning trade. So 2:30, 3:30, 4:30. We made some range, so in live condition, I would not take this trade. Let's leave it. Because as the market just closed on Friday and then just open and formed bomb, this sort of bomb usually does not work. If you are getting a bomb like which formed interweek, then the probability of content like working that bomb is very low. Let's suppose you form it formed a impulse on Friday, then you get your setup on Monday, or then there is a very high chance that it will not work. Here we are seeing some nice break. We had nice ascending. We have a trend to the downside. But the thing which I don't like is the candle, which has a wick at the top also, and it has a wick at the bottom also, big indecision candle. So let's just wait. Don't take these sort of candle, which has and prior to it was ascending, and here it just break the low and also formed wick. So it was not giving me that sort of a very healthy continuation trend. It was just ascending, descending, and after that we are getting a big indecision candle. So usually just try to take this. See, but as I am spending more and more time in trading, but I'm finding that, you know, when you start taking less trades, then you will start improving. If you will take a normal entries like normal trades, then then you will not be doing good. But if let's suppose you have start taking less entries, believe me, you will start seeing some good differences in you. Forming a bomb, but by looking at this sort of price action, if you look at it, just barely break this low. And we had this sort of wicks at the bottom. We have wicks at the top. So usually I don't like to take this sort of bomb. Break the low, retrace, went up. break the high, form the wick, again wick. So don't want to take any entry in this sort of market condition. A range bound market condition, no entries. It broke the high, but it just barely broke the high. So take entries in this sort of price action. These candles are trying to break the high, but I am not liking the candle because when the market it break the high, formed a wick, a retrace, break the high, sorry, break the low, retrace, break the high, retrace. And if you look at these candles, these are not giving me any sort of confidence that the market will continue its move to the upside. These sort of wicks are clearly telling us that there is a high chance it will retrace back. Break the high, retrace, and here also it just broke the low, but I'm not seeing any sort of ascending or descending. It's just a normal impulse. Let me see more time because the thing is that the height of this impulse is quite good. If you look at these market conditions, break the high, retrace, break the high, retrace, break the high, retrace, like 3-4 times, just retrace. But if I look at the entire price action, like still I want to I want to wait some more because I'm not liking this entire price action ranged wick to the downside, wick to the upside, ascend. It's again trying to fall inside this range. So if it again falls inside this range, there is a high chance that it may tag you in and tag you out. Wait. That's a good decision to not place any entry at around this area because we had lots of rejection from this price from this level. Okay. The previous price action wait a lot. Must look at how the previous market condition is before taking any entries. That price action must be very logical to you. Must look logical to you. Should not be like just a single impulse and then you take the entry. Those sort of entry will not work. Went up, broke the high retrace, then again came down, broke the low. It has weak entry. Again, looking at the entire price action, it's just giving me some sort of a descending vibe. And break the high, retrace, break the low. Just an impulse normally. Just wait. See, we are getting an impulse to the downside. We have also some wicks at the bottom. But when the market breaks this low, it try to continue its move, we get a wick, big wick at the bottom. So I'm not getting any sort of good confirmation to take this entry. This entry would be our perfect entry to the side. But suppose I'm taking a challenge, I may have closed this entry around 3%. And if let's suppose I'm taking it on my personal account or for passing the challenge, then I will let this trade run and manage it according to GT. This would be a perfect bomb for me. Like this sort of bomb should take. But as I have not managed my trade, I don't want to take another entry. Now I will be managing the trade just below this candle. I will be managing my entry at around this candle. These are all. This is inside bar for me, as it has. But these candles are not showing me any sort of strength to the upside, so I don't want to take any scaling entry at around this area. Yeah. Here, all candles have broken the previous candle high. Let's suppose I would have taken this entry. So not be a loss. But yep, after this candle I could take this entry, but that's okay. I just not wanted to take unnecessary risk because my one trade is still running well. Not wanted to take any risk. In normal scenario, I would have closed it at around 10% also. If let's suppose if this is my personal account or challenge account also, then also I not let it run like all the way up. Hit it at around 163. You have to wait for your perfect setup. It is not good to if the setup is not coming, then it is not like that. You should always do hit and trial to just take unnecessary entries, which does not fits your plan, and still you are taking the entry just for the sake of taking the trade. No. If you will try, if follow those sort of approach, it will become difficult for you to be profitable. But sometimes you get some good trades, but most of the time you will see that you are getting lots of losses, and then slowly you will start first getting frustration. So here, what I'm seeing, it just broke this low. Okay, and after that broke, it just start retracing to the upside. And let's suppose again a white candle just hit my entry. I don't want to take this trade. Market is slowing down, and now if let's suppose it hit my entry, then that would be a bomb flat bullet entry. So break was quite good. Everything was quite good. The thing I am not liking that this sort of after this sort of impulse, the market should not form this sort of setup, because when the market try to fall like this, then it should just give us one retracement and then it should continue. We have this week and the market is trying to retrace falling bomb slash bullet. That's not good. That's not good sign. There is a chance that it may start ranging. Let's just wait for one. So my suspicion was right. Because see, this is the logic. If let's suppose the market wants to continue its move to the downside, it should not give you this much retracement. If it wants to continue its move to the down, if it's giving you this much of retracement, there's a chance that it wants to be inside that range again. And we had also a wick, so I did not want it to take. If I look at this, break the low, like trying to continue its move, and then we saw a pause. Okay, then again we try to continue. We saw a wick and again retracement. Okay, this was just an this was the break. After this break, we got a week and again retracement. So this is also the second reason I did not want to take this bomb slash bullet entry. Here again, I tried to continue its move to the upside, but I wanted to see slow bomb slash bullet entry so that I can take the entry. Okay, this is a good scenario where it's just respecting this my entry. So if let's suppose again market reach at my entry level, I would like to take the entry because I can see that it's respecting my entry level. But the thing I don't like is that the market is still inside this range, trying to fall inside this below this range. So this can act as a fake out, and then the market may fall in. So a good entry would be like if let's suppose market continue its move to the upside. Okay, goes up, comes down. Then see, and one more thing. See, if a price wants to break a range, then how how do you think that a price should break a range? Let's suppose we have a range. How do you think the price should break a range? It should break like this, or it should break like this. I think this is the most likely scenario. If the price is coming till this area again, like it's almost recovering 90-80%. So if it's recovering 80-90%, so the chances is low. Although it may go up, there is a chance that it may go up, but the probability of going up is low. If it's recovering all like 80-90%, retracing 90% and giving you entry at around the bottom, that is not a good place to take a bomb slash. If let's suppose I would have taken this entry, I think it would have tagged me out. 2 pips above. Yep, it would have tagged me out. 10 pips. I have placed my entry just 2 pips above it. I have come down and here you can save your 1%. And you will see that just by saving your 1%, you have saved a lot of percentage. And in the beginning, if you are a beginner trader, you will not be able to read all these price section like I am reading. Okay, so what the beginners do, what I also used to do, I used to take all these trades. So sometimes 1 or 2 trades, let's suppose I'm taking all these trades. Okay. And let's suppose then if I'm taking all these trades, then I would definitely take this trade also. This trade at around this area. And it would give me somewhere at around, let's suppose if I would have taken this entry, it would have given me somewhere, let me just 15 pips. So it would have given me somewhere at around 5 percentage, 5%. So let's suppose I got 5%. Okay. So I get a cushion of 5% so that I can lose 5% by doing my hit and trial thing if I am a beginner. Okay. But if you will try to close this entry at 3%, and then you will try to do all your hit and trial and like mistakes, then you will not be having that cushion. So if you are beginner one, I would not suggest to close your entry at 2% or 3%. If you are taking more trades, okay, see, for my entire August, how much trade I took? Like I've taken only one trade. This was in July. So till this from this 1st of August till this 22nd of August, I have taken only one trade. Okay, but if you are a new one, you will definitely take like 5-6 trades. Okay, so if you are taking 5-6 trades and taking 5-6 losses, then also you need to have a cushion of 5-6% to make up those losses. And if you close your entry at 2%, then it will become difficult for you to recover your loss. We have a big wick at the bottom. It did not form any bomb, or if it would have formed the bomb also, then I would not like to take that bomb because we are in the middle of this range. If we get any bomb, there is chance that we can get a deeper retracement. So here we are seeing some sort of move to the downside, but we have a large wick at the bottom. And if I look closely to this price action, it's just not giving me that sort of confidence that let's move the low, retrace, break the low, forming a wick. Not giving me that sort of confidence that it will continue its move to the downside. If we look at the height of this black candle and this white candle, it's almost similar. Okay. If I would have taken this entry, it would have easily tagged me in and tagged me out. But I could not see, if you look at this candle, these impulse and these retracement are almost similar. Then again, it broke the low. And if you look at this white candle and this black candle, it is also similar. So if you are, see, the trend is a thing which The trend is a single bias impulse. A bias, if it's uptrend, the bias is to the upside. If it's downtrend, the bias is to the downside. And if you look closely into this uptrend or downtrend, the down impulse candles are always stronger than this retracement candle. If your retracement candle is similar to your downward candle, or if your like upward candle is similar to this downward candle, then there is a chance that it will either give you a deeper retracement or it will start forming some range. Okay, because in any trend upward or downward, there must be a deficiency of uh, strength in one direction. If let's suppose you market wants to continue to move to the upside, there must be a deficiency of strength to the downside. And if it wants to go to the downside, there must be a deficiency of strength to the upside. So that deficiency must be seen in your candles or in your impulse. Broke the high again, quick, broke the low again. So these sort of candles are telling us that the market has lots of volatility in the market. Price has lots of volatility. Big candle to the upside. Believe me, college thing is draining all my strength. When I started GT, at that time there were lockdown because of COVID. So I used to do a lot of back testing, and I had also a lot of time. Exams were online, so I need not to worry because questions were MCQs. But now the questions are in subjective form. We have 3 hours of exam, 5 paper, that, and on the top of that, we have to maintain the attendance also. Hmm. It has broken the high, so we have a new high. Broke the high again, then it broke the low. The thing is that every time it's broke the high, retrace, broke the low, retrace, broke the high, retrace. We have a nice impulse, although, but again, the thing is that the price action is not that good. It's not completely ascending. Okay, previously we have price was descending. Here it again started forming some sort of ascending, so it's not good. Just wait for one more candle. Let's suppose I would have taken this entry, then be my entry. It would have not tagged me out, but is that I did not like this price action, prior price action. Breaking the high retrace, break the low retrace, again break the high retrace, again just break the low, and again forming some weakness. Anyway, it was not sort of trade. If I get a bomb, I would like to take that entry. We have some wicks. Let's see. We get a red range. Have a large wick at the top. We have a large wick at the bottom. Here we can see that the market is trying to continue its move to the upside. If we look at the height of all these candles, these are weak candles, but these two candles are showing some strength to the upside. Although it is a big indecision candle, this candle is a big indecision candle, but still it's showing some sort of strength to the upside. These two candles showing some strength to the upside. Let's take an if a single candle just comes down and tag me in, I don't want to take that. So it's forming a bomb setup, but the thing is that it is shallow and we have a very large wick at the top. The impulse was also not that good. Prior price action was so very convincing. Just break the high, but it's not very convincing for me to take the entry. If I look at this is not an impulsive candle. Okay, this is smaller than this candle or all these impulsive, smaller than these candles. Usually after this sort of candle, we get some range, not a side. It broke the low and trying to continue its move to the upside. Height of the candle is quite good. If I see the height of this candle, it is quite good, looking quite good. So we can risk our 1% at around this area just because of the height. Price action is not very good, I would say. But if I compare the height of this candle, it is almost bigger than like all these candles. Okay, so if the market continues its move to the upside, then this would be the candle from where the market should continue its move to the upside. Okay, now it has broken the high. So what I would do, I would just managing my stop loss at around this area, at around break even. And let's see whether it continues its move or not. So would have tagged me out. Oh, let me just mark my well. Okay, this is our stop loss. So I would have exited it at around, and it has also touched 2%. So I would be exiting at around break even from this entry. Or you can see a 0.5% loss, or 0.4%. And if let's suppose I closed my entry at after as it reached 2%, I would be placing my stop loss at around break even. Then I would be closing this entry at around The height was the height of the candle was quite good, although the price action was not that good. But I saw that we are uh, struggling to go down, and we had a nice impulsive candle, so wanted to take risk. Like average or below average trade, because the price action logic was not that good. Broke the low, retrace again, broke the low, retrace, then broke the high. Price action wise also was looking ascending, but if I go in the literal sense of break the low and break the high, so it was just breaking the low, retrace, break the low, retrace again. Now it's we were seeing some nice candle to the was good average trade. I would not say below average, but average. Broke the high, retrace, then the market came down, barely broke the low. So it just barely broke the low. I don't want to tag me in and tag me. If I get a bomb, I would like to take. So it did not form any bomb setup. It's okay. Okay, we have also finished of August. We had only one nice setup, formed 8.63%. Let's suppose we minus this 0.4%, so we have made around 8.23%. And let's suppose I would have closing my entry, then I would have made around 3%, because this would be a break even trade, so I would have 3% net. %. Here I have made 3. Uh, one winner, one loss. 0, because that second trade was break even, so I am taking it as a winner. Here, let's suppose if I would have closed it at around 10%, so we 10.9.6%. So till now we are getting best result when I would have closed the 10% trade at around 10%. Then we would have got good results. Best result. If let's suppose the trade is at 10%, you should close that at 10%, then you are getting this result. If I would have closed all the trades at 3%, then I would have got this result. And if suppose I would have closed the trades at around this, according to GT, then I would have get minus 8.87. But that's okay. I don't have much expectation with Euro pairs. 2022. Previous result. Previously, I took that. Not that I made around. I took a lots of entries previously, like 7 entries, and this time I took only one entry. This time I was like very much towards the price action, not taking any unnecessary trades, any random, and I was taking only high probability entries, not all the entries. Bye bye, happy trading.